In the studio with me is George Radford, Director of IP Global. Very much a focus on overseas property though. Tell us a bit about IP Global first of all.
Thank you, Lindsay. IP Global, we're a research-driven property investment company, and we work with individual clients and we help them to build international property portfolios. The headquarters is in Hong Kong. I run our business here in Africa, and we've to date invested over $1.7 billion into 29 different markets. Our model very much is to provide our clients with an end-to-end investment service. So from the point of carrying out the research and the due diligence on the market, identifying the assets within that market where we see good value, good growth potential, going in and securing those assets on behalf of our clients, typically by way of a bulk purchase model, which allows us to create economies of scale and our clients benefit from a preferential purchasing price as a result of that. And then from that point onwards, we would do the end-to-end stuff, so appointing the lawyers in the local market, undertaking the acquisition, procuring the mortgage finance, or the bond as we call it here, and then going forward dealing with the lettings and the management, and then ultimately 5-10 years.
So truly a full service business you've got there, and the fact that it's a Hong Kong based company and you're living down the road in Sea Point, you've been here for over a year, must mean that there's some African and South African investors that are keen on your service. What do they favour at the moment? Everyone loves Australia and the UK. Is that the predominance of the interest?
Yeah, very much so. So a lot of interest in the UK. In London, it's still the favoured investment market by our clients here and our clients globally. Also more and more interest in outer London, not just in prime central London. We're seeing more growth in outer London, and then second to that in the UK would be in Manchester. And in Australia, we're seeing a lot of interest in the likes of Brisbane, Melbourne, and going forward I expect to see a lot more interest in Sydney.
George Gugu here with Lindsay. Maybe if you tell us about the level of return on these kind of investments, and if it's sustainable or not.
I think it very much is sustainable. I think what you've got to remember is that a lot of investors locally, they are concerned, discontented, worried about the political and economic outlook, not just in South Africa, but in countries like Zimbabwe and other African nations. So clients are not necessarily focused purely on, getting double-digit returns, which is what we actually deliver. They're more focused on, safeguarding some of their investment portfolio, looking for diversification, getting exposure to strong currencies, more stable countries, more stable economies, more sound legal structures. Where they feel that God forbid anything happen, they've actually planned for their succession planning for their children and also for their own retirement planning. In terms of the returns that we've generated, to date we've invested $1.7 billion US globally. To give you a snapshot on probably our two core markets, the UK and the US. In the UK, over the last 5 years, we've generated leverage returns at the lower end from 33% up to over 200%. On a leveraged 65% loan-to-value mortgage basis since we got into the market back in March 2009. In the US, in New York, as an example, where we spotted the bottom of the market back in January 2011, we've generated absolute returns on the investment, not taking into consideration the mortgage, anywhere from about late 20s, 28, 29%, up to as much as 50% over a three and a half year period.
You can, of course, invest in JSE listed companies, property companies that have exposure to places like the UK. And there was recently a company that came to market that was just European, I think, based in Germany, but it's listed. It's got a secondary listing in South Africa. So this is a great appetite. And the institutions over the last few years have not ignored listed property as an asset class, but certainly they're starting to recognise, and it's beaten most other asset classes. So this plays into your hands as well.
It does indeed. Going back to my initial comments, I think if you look at an investment portfolio, people need to be well diversified. I think they need to have direct fixed residential assets in there. They can have some fund investments, they can invest in some REITs, they can have some equities, they can have some stocks, have some bonds, and obviously some cash. And I'm not saying that our clients are looking to completely diversify their portfolio and get all their money out of South Africa. Not for 1 minute. People need money to sustain their lifestyles locally. They're just looking for some diversification into some of those core markets. We're also very active in the US, in New York, Chicago, Miami, and more recently we've entered the Germany market in Berlin. Again, looking at safe haven markets where you're getting very strong currency exposure, USD, Euro, Australian dollar and sterling.
Okay, George, thanks very much for popping in this lunchtime. That's George Radford, Director of IP Global.